If you've ever felt confused or intimidated by the stock market, you're not alone. Wall Street makes it sound complicated on purpose. But here's the truth. The stock market is actually pretty simple once you understand the basics. In the next few minutes, I'm going to break down exactly how it works, how you make money, and how you can get started even with just a few dollars. Let's dive in. First things first, what actually is a stock? A stock, also called a share, is a tiny piece of ownership in a company. When Apple sells stock to the public, they're selling small pieces of their company. If you buy one share of Apple stock, congratulations, you're now a part owner of one of the biggest companies in the world. You're not just a customer anymore, you're a shareholder. And as a shareholder, you have a financial stake in how well that company performs. Now, the stock market is simply a marketplace where people buy and sell these shares. Think of it like eBay or Craigslist, but instead of selling furniture or electronics, people are trading pieces of companies. The main stock exchanges in the US are the New York Stock Exchange, also called the NYSE, and the NASDAQ. Companies list their shares on these exchanges, and investors trade them back and forth all day long. When you hear the market opened or the market closed, they're talking about the hours these exchanges operate, typically 9:30 a.m. to 4 p.m. Eastern Time on weekdays. So how do stock prices actually move up and down? It all comes down to supply and demand. If more people want to buy a stock than sell it, the price goes up. If more people want to sell than buy, the price goes down. It's that simple. But what makes people want to buy or sell? Well, it's all about confidence and expectations. If a company reports strong earnings, announces a breakthrough product, or shows solid growth, investors get excited and want to buy, pushing the price up. On the flip side, if there's bad news, like declining sales, a lawsuit, or poor management decisions, investors lose confidence and start selling, pushing the price down. The stock market is essentially a massive voting machine where millions of investors are constantly voting with their money on what they think companies are worth. All right, so how do you actually make money in the stock market? There are two main ways. First, dividends. Some companies share a portion of their profits directly with shareholders, usually every quarter. So if you own 100 shares of a company that pays $1 per share in dividends each year, you're getting $100 just for owning the stock. It's like getting paid to be an owner. Second, capital appreciation, which is just a fancy term for buying low and selling high. Let's say you buy a share of Tesla for $200. A year later, Tesla is doing great and the stock price is now $300. You sell your share and pocket the $100 difference. That's your profit. Of course, it can go the other way too. If the price drops to $150, you'd lose $50 if you sold. That's the risk. You've probably heard terms like bull market and bear market. Here's what they mean. A bull market is when stock prices are rising overall and investor confidence is high. Think of a bull charging forward with its horns up. That's the market going up. A bear market is the opposite, when prices are falling by 20% or more from recent highs and pessimism takes over. Think of a bear swiping downward with its paws. Markets go through both cycles. The key is not to panic during bear markets because historically, the market has always recovered and gone on to reach new highs over time. Now, here's the good news. You don't need to be rich to invest in the stock market. You can literally start with as little as $5 or $10. Platforms like Robinhood, Fidelity, Charles Schwab, and Webull allow you to buy fractional shares, meaning you can own a piece of expensive stocks like Amazon or Google without paying thousands of dollars for a full share. Here's my advice for beginners. Start small. Don't invest money you'll need in the next few months. Do your research. Understand the companies you're investing in, and consider starting with index funds or ETFs, which are basically baskets of many different stocks. This gives you instant diversification, so you're not putting all your eggs in one basket. A couple of important warnings before you jump in. One, the stock market is not a get-rich-quick scheme. It's a long-term wealth-building tool. Two, never invest money you can't afford to lose. The market will have ups and downs. 3. Avoid day trading when you're starting out. Statistics show that most day traders lose money. Instead, focus on buying quality companies or funds and holding them for years. That's how real wealth is built. So, there you have it, the stock market demystified. It's not some complicated Wall Street secret. It's simply a place where people trade ownership in companies, prices move based on supply and demand, and you can build wealth over time by owning pieces of businesses that grow. The most important step is just getting started. Open an account, invest a small amount, and learn as you go. Your future self will thank you. If you found this helpful, hit that like button and subscribe for more financial education that actually makes sense. Drop your questions in the comments. I read every single one. See you in the next video.